Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Thursday, November the 7th. Quick run of the numbers. Dow Jones up 128, Nasdaq down 7, almost 8 points, S&P up almost 8, Russell down almost 5 points. Russell is indeed the weakest sector of the 5 that we follow. We do see some deterioration in the internals. I'm going to show that to you in the charts. Nothing really has changed from yesterday. The fact that the Dow actually popped higher and stayed higher, made new all-time highs, while other sectors are starting to deteriorate, is a big red flag, guys. And I wanted to show you quickly what we have here in front is a 5-minute chart of the SPY, the spiders. Just take that off the proxy of the S&P 500, and you can see what's happening here. Literally no price action. We have one move lower. We grind higher, sideways consolidation. We popped up yesterday. We moved a little bit lower, sideways consolidation, pop into the close. The price action in stocks are just miserable. They're terrible. And the reason why is because the markets now are trying to determine which way this market is headed. Now, yes, we are indeed in an uptrend. We've been in an uptrend since October the 7th. We have been making new highs virtually every day in certain sectors. But when you get up to these lofty levels, you will see without a pullback, like we've been indicating, things get a little bit tougher. And what you want is you want to keep that gun loaded. You do not want to be pushing yourself, trying to make some money when the market is very difficult to trade right now because of the fact is longs really aren't working, shorts really aren't working unless you just close your eyes and just get short the market. Now, a couple things that were working and we had yesterday was crude oil. Did actually very well, bounced off the lows. But again, that's a tough trade. If you were looking for, before the crude oil actually bounced and then rolled over and then made a low and then bounced and then pretty much was in a chop mode pretty much most of the day. So, you know, you have to weigh your risk-reward scenario. But we do have some event risk today and tomorrow. We have the ECB, European Central Bank, and the BOE, Bank of England rate decision that comes out today. The ECB is really the one you want to be watching. And we have U.S. GDP. Now, that's going to be closely watched. So markets are going to pick up either way. And we are, I'll show you that to you in the chart segment, but we're just basically just a streamline. We're flat overnight in the overnight session. We're down only $2. It's pretty amazing stuff that there is absolutely no sellers. There's no volatility. Matter of fact, I think we made new lows in the VXX, which is an ETF instrument, and well, not quite new lows in the VIX itself, but telling me we have extreme complacency. And mark my words, remember when you're going to hear this first, when you have something like that and everybody's one-sided, it's only a matter of time before the markets catch up to it and begin to really correct its overbought reading. Okay, so now what I wanted to mention also, we have non-farm payrolls coming out tomorrow. That's also going to be a huge number and closely watched by the Fed, by the Federal Reserve. So remember, today's going to be very important, and gold and oil will definitely be moving on that. Okay, we are streamlined here. We have gone nowhere in the overnight session, and one thing that I'm going to be watching for in the markets as well is going to be the yen. And you can look at the spot yen or the dollar yen. But when the yen starts to move, and just so we all know, so we're all in the same page here, it's a risk off, risk on type thing. When the markets really start to break down, I have no idea why people run to the Japanese yen for a safe haven currency like the U.S. dollar. And that obviously hasn't been happening because what's been going on with the Fed really devaluing the currency, U.S. dollar currency. So keep an eye on the Japanese yen, another thing to look at. But aside from that, even if you're not looking at the yen, watch what the VIX does in the tick intraday. But I want to show you some internals. They're starting to deteriorate here. Bullish percent, S&P. We did get that sell signal. Now, even though, despite that, the Dow was up, obviously, right, the S&P was down. And we didn't have we had a little bit of movement, but we were up ever so slightly. This, I'm going to put a line going across here, and as you can see here, we are now in a sell mode. We literally almost got to a point where the October 7th low, we got a buy signal in October 14th. So not too shabby. Doesn't quite pick bottoms or tops, but very reliable indicator. So this actually went on a sell mode. So something that you definitely want to keep in the back of your mind. Okay, New York Stock Exchange new lows. If you see here, what's happening? Well, we're making new highs, but we're not making the New York Stock Exchange new lows is picking up steam. Actually ticked up yesterday. That's something that's a big concern of mine. I did mention, I've showed all this to you guys before, but I just want to show you with yesterday's Dow movement, we are actually getting an uptick in new lows. Stocks aren't moving. The indexes are. Okay, take a look at the tick. End of day tick reading. New York Stock Exchange. Well, if we were up 126, why are we down 283 ticks from the previous high? Okay, now, and we're just breaking that zero line. So this is something that you cannot let this go unnoticed. Okay, New York Stock Exchange new high, new lows, continues to move up 117. So this is something that we really need to pay attention to. The internals are starting to break down. Okay, the VIX. Now the VIX made new lows, not all-time lows, but new intraday lows. Right, we're back at these areas now, and we're 1250 will be the spot. Oh, I apologize. It's the VXX actually made new all-time lows, intraday lows. Yesterday, not the VIX. That's the ETF, the VXX. Just want to make that point. Sorry about that. But anyway, again, extreme complacency. When you have that, you have to use caution here. Another thing, copper. Copper now, right, hasn't led, right? We used to call it Dr. Copper, but copper has not led this market up and or down. It literally just actually has been down pretty much all of 2013. Took a major dip lower yesterday. Eventually, if copper starts to deteriorate and break down, I think that's also going to help the bear case. May not help it now, but it's just something that I continue to watch. Now, a lot of market participants, traders, investors, they don't even look at copper anymore, but I still do. I think that's still an indicator that if something does happen, deteriorate really, really bad, and really start to fall out of bed, this is something that it's not going to go unnoticed as well. Now, another thing that we have is the XLP versus the XLY. Here's the ratio from consumer staples versus consumer discretionary. And why do we look at this? Well, when risk is on, right, we have the Russell moving higher, running on all cylinders. We have technology moving higher, and we have the consumer discretionary. You know, it's a high risk play, right? A higher beta name. And we have our consumer staples, which is basically the big elephant in the room, you know, slow growth, but steady. And people want that. Well, when you have money rolling into consumer staples and utilities and healthcare, people are parking money for safe haven status. And that's what's going on here. As you can see, when we had risk on all the way in May, this ratio was now indeed lower. Now we broke out of it October 7th, and we are now actually flatline, starting to break out of this little range here. That doesn't bode well for the market itself as far as risk on, risk off mentality. We have money coming into the XLP versus the XLY. Look at utilities. Same thing with utilities. Utilities starting to break out of this range here. Money's being moved into the safe haven. Now you can make an argument that, well, money's coming out of technology and a Russell and going into that. Well, yeah, that's my point. Is because that money's coming out of risk assets and being put into work in these safe haven securities, okay, and these sectors. So again, not a great sign for me anyway. As far as when I'm doing my analysis, that we do have money coming out into the safe haven, and then we have a lot of these indicators not really showing what the market indeed is doing. So to me, I think you have to be very, very cautious here. And again, can the markets go to 1780? Absolutely, absolutely. Can it go to 1800? Sure. You know, it's not what we think; it's what the markets do, and how we make money, and it's also how we manage our risk accordingly. So I still am a bull. You know, a bull meaning that I do see long term the market's doing okay. But when you have these extreme levels with no selling at all and everything one-sided, it's going to take only one thing, one catalyst to get this market to move lower. Now, at the moment, it seems to be that there are absolutely no sellers around at all. And that could be very well be the case. But Remember, things turn quick and ugly faster than when the markets move up. So just keep that in mind. All right, go right into the chart segment here. I'm not going to waste a lot of time here. Gold looks like it's flagging, giving us a bear flag. I would like to see gold pop today, maybe on the number, and then sell off. And that's going to be a great opportunity to look to get short if we can get to that right side of that shoulder. Again, I'm not advocating any longs in gold, even though you probably could take a long here if you wanted to. But to me, this is clearly in a downtrend, and I'm going to stick to the trend. And I like to sell rallies, any decent rallies, not 10, 12 points in the in gold for the day. A couple of days up and then fail. That's something that I'm looking for. Hasn't happened yet, but keep in mind. Let's be patient here. All right, crude oil. We had the USO trade. We said, listen, I think if you take out yesterday's high, meaning the previous day, you could look for an entry in USO. Sure enough, easy to manage. We came into this heavy consolidation area. To me, that was a good buy-in if that is what you do. Remember, we are clearly in a downtrend. This is a retracement play, and if you're not into a retracement place, then just stick aside, let the markets digest this area and see if we can break bearish symmetry. Until then, this is only a retracement play, meaning maybe back to the 8 or the 200. Okay, again, this is a little bit more of a dangerous play because markets can easily roll over and fail. And if you looked at crude in the overnight session, that's exactly what happened. We actually went sideways. The crude market just fell out of bed and then realigned itself. Now it's trading up 37 cents in the early morning hours. So a little bit of a wild card, but easy to play, easy to manage would be the USO, not the future itself. All right, so let's take a look at the spiders here. A bunch of dojis, indecision candles here, up, down, still hugging the November 2012 lows. What can we say? We have to wait and see what happens today. Today, either we're going to break out or we're going to break lower here, guys. It's just really, that's about it. Nothing more we can say. We are overextended here. We're starting to break lower in the MACD. Stochastic still well above 80. Market's still well bid up. So there's nothing really we can say until price starts to either break lower and starts breaking this low here, that 175.20, 175.08 actually, even give it to 175 on a break and close lower, then we could see some downside momentum. But until that thing breaks, until we take out 175, we still have a shot to make new highs again. Here is the IWMs. Now, this is one of our leaders, as you can see, breaking down miserably. And if you see, we have another bear flag here. Okay, and this is something that you do not want to see, right? And if you're looking at, NASDAQ, transports, Russell, S&P, and Dow, those are the 5 sectors that we follow for a gauge of risk. You can see the IWMs here not doing too well. Definitely the weakest of the 5 that I just mentioned. And if we continue to break down, we are sitting on the 20-day moving average. If we lose that 20, I think you're going to have a deeper downside correction in the Russell. Now, again, do we have sector rotation? We definitely have money coming out of Russell. There's no question about it. Where is it going? And if it's going into that safe haven, that's something that you don't want to see. You'd rather see it being put to work in a different part of technology, anywhere other than the safe haven sectors. Okay, take a look at the diamonds. As you can see here in the diamonds, big day, made all-time highs in the Dow Jones Industrial Average, and now we're just testing the second uptrend line from the November 2012 lows. And again, nothing really happening here with JP Morgan in the bank sector. Transports actually took it on the chin. We did have a move in oil. And remember, the transports are up because oil actually has been getting decimated the last 2 to 3 weeks. Once you have oil starting to tick up, the transports will move lower. And if oil does catch a big bid and start to move up again, you definitely will have the transports moving lower, as well as the airlines, the trucking companies, and of course the railroads. So just keep this in mind. And then of course that would also put pressure on equities as well, because when you have the leaders starting to break down, usually everything will follow suit as well. Okay, so let's take a look at the XLF. Really not much to say. We do have Goldman, though. Let me just mention Goldman. I said Goldman, a break above here, could see some further upside. This is a great trade. This is something that I would like. I do like Goldman. I mentioned Goldman. I've been talking about it for the last couple of weeks. We haven't gone anywhere, but now we actually broke out this consolidation on volume. So to me, I think Goldman here looks like a great trade to the long side. But remember, were elevated. The XLF really hasn't gone anywhere. JP Morgan hasn't gone anywhere. So this could easily fail. You have to keep that in mind. Keep a tight stop if you're looking to play Goldman Sachs. All right, so let's go right into Apple. Again, Apple really hasn't done much for me. I'm looking for a deeper downside correction, maybe to the 50-day, and then that would maybe entice me to pick up along with a stop just below the 50. Right up in here, even if it got to 540, to me, it's just risk reward is way too high. I think risk is a little bit more to the downside than to the upside. So to me, Apple, I have no trade in Apple. And the IGN, as you can see, head and shoulders pattern has triggered, and now we're basically flagging back in here. Let's see if this flag can fill, right? Right now, all it is just two candles, but let's see if it can fill right there and maybe back test this area here, and then look for additional downside move. And this is the target right here, would be 2706. But sometimes the head and shoulders pattern is a tough pattern, breaks back up again and then moves higher. So this is something I always like to wait for the flag, let the flag break lower. That's your confirmation of this head and shoulders pattern. But again, networking sector not doing too well. And then lastly is the Qs, as you can see. Now, don't get me wrong, technology is holding up well. As you can see here, we are holding this upper trend line. So that is quite bullish, but we're going to need to either break out of this one way or the other, down or to the upside. So again, I think today and tomorrow is going to be important days for risk on or risk off, and that's going to be pretty much a deciding factor for the next few weeks if we are going to move higher. And believe it or not, 1780, the next target in the ES in the minis, which is not that far away. And even if it went to 1800, another 40 points, we've done that in 2 or 3 days. So just keep that in mind, guys. All right, I wouldn't just go out and blindly just short the market. Let price tell us which direction this wants to go. And right now, it's a little difficult trade. Keep in mind, let's get some of this event risk out of the way. Tomorrow, another big number. Don't forget non-farm payrolls. Keep your pallets dry. Get ready, because there is going to be some action in the coming days. Have a great day. We'll speak to you tomorrow. Take care.